There's come by becoming rich.
Take all your money, buy Bitcoin.
I say when we sell.
Wake up every morning and say GM.
GM. Today is Tuesday, 6th of August. Daily levels. So, yesterday we had a red start to the day and then a bounce in the New York session and going into the close. But what's interesting, looking first at ETFs, I was very keen to see what happened with ETFs yesterday. 0 on IBIT, so 0 on BlackRock, and a net outflow day after a net outflow day on Friday. So Friday, if you remember, we had the bad economic data, and that was when the fears of recession really started. And it seems like if investors are worried about recession, they are going to sell their Bitcoin. That's what that indicates. This doesn't indicate that there is a recession or will be one, but it seems like that tendency towards those fears of it happening will lead to outflows, which could be an additional drag on the market. ETH still sort of doing its one day green, one day red, back and forth, still total overall net outflows, but not a huge amount to read into that. Looking at the market itself, we moved up straight off the daily open and tested some levels up higher and are now retracing back. I think that probably most likely is that we come back down and consolidate a little bit lower, and I'll talk more about the specific lower intraday levels on trade of the day. But for daily levels, zooming out and looking at this, like there's a huge volume day, as you can see, massive big volume spike. But looking at the bands here, we are sitting at well below them on the daily, of course. 4 hour is the one you want to watch. So we've had our bounce up into the 4 hour bands initially. And of course, in a downtrend, you expect that to reject. That's where sellers would initially step in. Whether it leads to a new low is unknown. For today, you can see the gray line, 53,988. So basically 54K, that's the daily open. Of course, that is our pivot level you'd be looking at intraday. If today's daily goes red, that's a big bearish sign for the market. Mostly because when you're looking at a bounce like we've had, is this bounce a bullish, let's go, it was just a shakeout, just a quick dip, you're all fearful, no need to be afraid, let's send it, run it back? Or is it just a standard, you sell off significantly? I mean, Monday opened where? Monday opened at 58, dumped all the way down to 48, and we had a retracement back up to 55, 56. So far it looks like just a standard bounce. And what we're looking at next is, does a higher low form somewhere in here? You know, the market has broken structure, bearish in many different ways. And I look at the lower time frames. On the New York open yesterday, we squeezed up, and the same thing happened on stocks as well. So New York open produced a squeeze higher on Bitcoin and stocks, and we saw the VIX come down, and you know, we know all of this, right? So right on the open of New York, squeeze up, push, push, push. So far it looks like just a counter trend retracement rather than some kind of a more significant trend shift. And from here, there's a couple of ways this can go. If the New York session yesterday was not a bullish reversal, but was just essentially the market was in fear. So everything off the open, Sunday at 9, 10 p.m. UTC, that's when the futures markets opened, and everything started selling off pretty much right away. And then off the daily open, continued selling, and we sold down all the way into the New York, the US main session. Same thing was happening on stocks. And the squeeze, I think at least, was predominantly led by poor positioning and overextension to the downside without necessarily being an indication of a reversal, right? So it's too early to call this reversal, of course. you're in this situation where the market can keep grinding up and grinding up and grinding up. I touched on this in trading analysis last night, mentioning this. On the 1 hour chart, you'd set a base, moved above it, flipped over, retested it, moving up. And overnight we moved up a little more, but we haven't had a breakout and clean retest. So if you look at it now, it had a breakout, but only just pushed above the highs, consolidated above, and we've dropped back inside. So far there's a false breakout on Tuesday over the Monday high. And so if you're looking at Monday's high failing on Tuesday, or not Monday's high, sorry, Monday's high was over there obviously, the New York session high, we're now back inside of that range, which could see us move to the other side. First level up is the daily open, and then below there we'll see what happens. But today I want to look more across the market. So I think what is important to remember is that this is not a bullish move that's happened, right? And the fact that there's a big long wick on yesterday's candle does not mean that the market is reversing, right? It means that the market went down very far, very fast, took out a bunch of lows, and essentially there was room for a rally as the market had oversold too fast in a short space of time based on whether the fears are legitimate or not. You know, a lot of this rally is based on people not knowing what they're doing. So how many of you, including me, how many of you had a deep knowledge of Japanese, fucking yen carry trade until last weekend? Not many people. Obviously, it's easy to understand in principle, a carry trade's a carry trade. But the dynamics of it is one of the things that caused this fearful sell-off. The fears of recession caused the sell-off. The fears of war caused the sell-off. So every different person sells for different reasons. And of course, we have just the standard liquidations. Whenever there's too many people long and prices go down, they start to get forced liquidated. So when you have an event that is unknown, especially recession, like almost nobody here watching this would have traded through a recession. COVID doesn't count because it was a panic, and technically we flipped a recession, but the Fed came out and printed infinite money before the recession was even confirmed, so you could never call that a economic collapse. It would have been an economic collapse, but they stepped in. The last economic collapse we had was 2008. So how many people traded through that? I certainly didn't. I was too young. Most people didn't. Most people in the modern market don't have a memory of actual recessions. So they're selling based on emotion on something they don't really understand, same as the Japanese yen carry trade, which explains why after the big sell-off we got this bounce, as initial expectations probably went too far too fast, and we have a gap fill, inefficiency, bounce up, it just goes down too far, drops, bounces up a bit. What you really need to see now is the next 1 or 2 days of price action. What's going to happen next? There's two types of collapse, and you have to wait whether you think we are going to have one or the other, or either of them, or neither of them. There is an economic collapse, and there is a financial collapse. I'll go to the stock market to show you this, because obviously crypto doesn't have many years of history. And there's all the previous recessions that we talked about, when they were started and when they were announced. But an economic collapse is 2008. Housing market crash, pushed into recession. This was an economic collapse that also was a financial collapse. You had both happening. Right? There was a financial collapse, great, obviously GFC, great financial crisis. But also it tanked the economy and tanked the world economy. This is also known as the Great Recession. Like, this is one of the most brutal market periods there's ever been. This is where you get both. This is where you have a financial collapse which takes the markets down and requires monetary policy changes and Fed intervention, and the economic collapse that comes from the housing market declining to the point where houses are worth less, debt markets blow up, people are out of jobs because a huge amount of economic output comes from real estate, construction. Lots of people are out of work, and it took many, many years for the global economy to recover. In 2000, we had more of a financial collapse, the dot-com bubble, right? So because it was a dot-com bubble, this was all about internet stocks. This didn't affect the average person on the street as much, anywhere near as much as 2008. Yet it still caused, obviously, massive decline in the stock market, but a shorter, shallower recession. The recession that came from this was a very mild recession in 2001. The recession that came from 2008 was deep. It lasted about a year in America, but across the world, especially in Europe, there was recession for many years, multiple years, in terms of poor conditions for working, etc., etc., etc. If you go back to 1987, this is a good example of a purely financial collapse. The crash, Black Monday, a crash of Monday, 19th of October, 87. The market was in a speculative bubble. It basically went too high, fully collapsed in a very short space of time, and then up we go, and basically resumed service as normal. At this time, if you read into the history of it, and this is from the Market Wizards books, the original, the first one, you hear a lot about this because it was right around that time, and the author asks the traders in the book about, what they expect. Most of the best traders in the world, right? Most of them were expecting, whenever the book was written in sort of 1988, after the crash, most of them were expecting the economy to go into a deep economic collapse. They said, we've had the financial collapse, we're now going to see the second wave, which will be an economic collapse. Obviously, it never happened. And so on and so on and so on. The question then, and then obviously, where is COVID? COVID is another example of this actually was an economic collapse because COVID threatened to shut down the whole world and did shut down the whole world. But the Fed's response meant that any economic collapse was avoided, apart from the massive deleveraging initially. Fed stepped in, economic collapse avoided. It was more of a financial crisis, short, sharp, quick retracement, back up we go. So is this time different? Is this time the same? Are we going to have one? Is there going to be an economic collapse? Is there going to be a financial collapse? Maybe, maybe not. So if you're looking at what's the factors, Japanese yen carry trade blow up. Okay. So the Japanese yen blowing up in this carry trade is not something that will cause an economic collapse by itself. It can cause financial collapse because if it's a huge trade that has contagion where the people involved are exposed elsewhere and it causes this domino effect of financial conditions worsening, you could see that spreading across the markets and you could see a financial collapse. Economic collapse, very, very unlikely. Why would that have an effect on the US economy, right? It shouldn't really. GDP for the US shouldn't be affected by that. Is this going to put the average person in America out of work? No. If you're looking at an economic collapse, you're looking at economic conditions worsening. You're looking at rising unemployment rapidly and sustained. You're looking at lower GDP, so less productive output in the economy. Manufacturing, services, the different areas of the economy significantly weakening and moving into contraction territory. And so none of that is really indicated yet. You obviously have some weakness in the jobs market with rising unemployment. You have some weakness in the manufacturing space. But the services space is fine, and services is the biggest part of the American economy. Obviously, America does not manufacture to anywhere near the extent it used to 30, 40, 50 years ago. Globalization meant that all of that went to China. Services, which is everything else, travel, restaurants, hotels, general, so like gym, massages, fucking healthcare, beauty, all that kind of stuff that people spend on services. That's the biggest part of the US economy. And that still seems to be doing okay. There was data that came out last week, and I think even yesterday, indicating that services numbers still seem okay. Of course, all of this data a lot of it's just fake, and a lot of it's lagging, and they change the way it's measured to make it seem good or seem bad. But the key thing here is the market now has shifted into fearing one or the other, fearing an economic collapse or fearing a financial collapse. You have to look at what the Fed have done and what they will do to say a financial collapse seems very unlikely, because when we last had stress over here, this was when the Silicon Valley Bank, etc., were literally collapsing, smaller banks, and the Fed came in and said, nope, we're not going to allow that. We're going to bail out anyone else. And COVID, of course, same thing, right? The whole world was going to collapse, and they said, nope, we're going to print like crazy. So it's reasonable to expect that a financial collapse is not something that's going to be allowed. It's a policy decision, right? They can print their way out of it. You have two choices. You either let the whole thing burn down, or you step in and you support markets and you intervene with money printing, easing conditions, and all of that. So it's only reasonable to expect that that will be what they would do again. The US debt situation is such that they can't afford to pay their own debts and they have to monetize it, so they print their way out of it. Obviously, that creates a difficulty for us as traders because every single person expects this. Right? Everyone who's been alive for the last 4 or 5 years knows money printer. It's a meme, right? Money printer go burr. You've got the meme of the fucking Jerome Powell printing all the money, and everyone knows that this is the outcome. So that then affects how it would be affecting the market. And I think that you do need to see a new massive wave of printing, right? Like financial conditions do need another boost for markets to go higher. I'll look at this in a couple of different ways, right? If there's a financial collapse, you see prices go down a lot faster, rapidly, and then they come in with some kind of intervention, and then everything grinds higher, and it's like COVID 2.0, but just not as deep, right? If it's an economic collapse, that's where you're not seeing any all-time highs in stock market for years, right? An actual economic collapse, again, go back to 08, right? You're looking at many years before you see new highs. Bottoms out in 09, goes higher again in 2013, 4 years later. Those are the two outcomes in terms of the extremes. The other side is you don't get either. You don't have a full economic collapse, you don't have a full financial collapse. And in that instance, you're going to see the markets basically go nowhere until such times as you see either a normalization where prices just start to grind higher again because the economy is doing okay and interest rates are coming down, but they're not printing trillions of dollars. And you'll see the markets just grind. That's fine for the stock market. That's really not going to be that big for Bitcoin, right? Bitcoin is such a monetary instrument. Bitcoin is a response, absolutely, to monetary policy. When you had this financial collapse, economic collapse that could have been that they avoided by printing shitloads of money, you saw what Bitcoin did after. It absolutely mooned because they printed so much money and it was financial irresponsibility, and the market knows exactly what to do in that situation. They haven't done that since. There has been no mass money printing since then. There has, and this is the thing, like when you look at like global liquidity that everybody talks about and everybody looks at, there's a big difference between a new wave of mass printing and rising global liquidity. Right? Steadily rising global liquidity over time will make the market probably not go much lower and probably steadily rise. If you're looking at big, massive Bitcoin 100K, 150K breakouts, you're looking at some reason, some excuse for the Fed to come out and do what they love to do, which is print a massive amount of money. It usually comes in response to some kind of panic. This panic is not deep enough. There is no emergency cut, no way. As of what we saw yesterday, there is no emergency cut coming. There is nothing that is going to happen based on a Japanese yen carry trade blowing up. The Fed are not going to step in because some institutions got themselves over leveraged into a trade over in Japan. Not going to happen. If there is something that would have a potential to ripple effect throughout the US economy and shut it down, like COVID or like 2008, they will, almost certainly, they will step in and then embark on a new wave of printing. And when I look at, I've been thinking about this, the past few days, when I look at what's the next best big trade on Bitcoin, to me, it's going to be, when do the Fed actually come in and step in and print more money massively? That's what 2020 was. When are they going to do it again? My bet is that they do it again. They will do it again. But I don't think that it's not going to be this week. It's probably not going to even be this year. This fear can pass and we can start to move towards the election and the markets can calm down and everything can go back to kind of normal. And that'll be enough to take Bitcoin, let's say it hangs around here, it goes a little bit lower, it chips around, and then everything's fine, it comes back up. That's enough for Bitcoin to stay in Bitcoin's range. But for all of this, it's probably going to need a crisis and a big intervention and a huge amount of printing again. And so when I look at it from what's the next best actual trade for BTC? It's probably just to do nothing until the Fed shows their hand. They're very clear about what they do. Whenever the Fed goes into one of these crisis response, cutting rates rapidly, printing money, it's not subtle. It's not hidden. They come out and straight up tell you, because they have to, because they need to calm the markets and hope that them stepping in is enough to save the global economy or the US economy or whatever. So just purely looking at the magnitude of the next moves, am I interested to get super long Bitcoin here for a move up to that level? Not really, because the risk of downside is still there. And unless it's in response to the Fed, I think it's best to just sit tight. And this could be months or years, right? Things might go back to kind of normal for the next year. Then maybe there's a proper credit crisis or some kind of crisis in the markets in 2025 or 2026, and that pushes the Fed to go on to COVID 2.0, right? 2020 style of printing, debasing the currency rapidly even more. And that's when Bitcoin's just going to go on a one-way, up-only march. And I think that working and trading, so trading short-term, which I do, and stacking cash and saving profits and putting it into Bitcoin long-term spot and putting it into keeping it in cash, ready to buy whenever the Fed are actually saying what they're going to do. I think that the next best big trade of our lifetimes is ahead of us. It just might not be in the next 3 months like people think, right? Global liquidity and normalization of US and the US money supply and all that has taken us to where we are, but it's not going to take us much beyond until there's something bigger. Bitcoin is also on an adoption path, right? So Bitcoin can also grow because more people are buying it and bigger players, right? Billionaires and big companies and countries and all that. We know all that. That's all absolutely possible. But look at the US M2, US money supply. Put it down here. There's no doubt. This rapid response to COVID and all the printing gave us an absolutely ripper of a market. If everything is fine and we just go back up towards all-time high money supply, but it's just kind of normal, you're going to see Bitcoin do the same. And if that's happening, being like generally long Bitcoin is fine, especially if it gets above 70k and you're going for a breakout, sure. But for me, I think the Fed has to do what the Fed's going to do, which is big intervention, printing again. And I don't know when that's going to be. And usually it comes in response to some kind of crisis, which, we haven't seen yet. We've seen like the whispers of one. And by the way, if this gets avoided, it's probably going to take many months, if not years, before the next one. And you have to remember that as well, because the last time there was big stress in the system and real fears of collapse was March 23. And everyone panicked back then, and then it didn't come to pass. And then we had, until literally last week, so we had almost 18 months of nothing. 18 months of no real panic. So keep that in mind as well, that when the panic sets in initially, if that turns out to be a false alarm, people are because it's happened recently, people are looking for it everywhere, and they're looking for the next big scary thing. But if the next big scary thing doesn't materialize, doesn't come along, it's probably going to take months or years for the next thing to develop. If it's not, recession this time, if it's not Japanese yen carry trade bringing us even lower, if what's happening right now doesn't come to pass, the next thing that scares the markets is probably a long time away. And that's where you'll see the markets normalize, you'll see Bitcoin rise up again, start to grind higher towards all-time high, but probably not the massive, huge bull market move like post-COVID, or the massive response post this crisis. Dip down to 19, all the way up to 30, and then consolidated to move higher. So I think that as I look at this higher time frame, I want to see what the Fed are going to do. Really as simple as that. When are they going to panic again, rapidly cut interest rates, come out and say, we're going to support the markets, we're going to, add liquidity? That's the time where that's your big, starting gun firing, all systems go signal for BTC. And we'll see when that happens. I don't see it yet. Unless this current panic gets worse, which it doesn't seem to be. It seems to be easing off at the moment. If it does get worse, it'll get worse soon, right, in the next 1 or 2 weeks, and that might actually stimulate the Fed into action, which would be very bullish Bitcoin once you get out of the way of the initial selling. Otherwise, I think, people are expecting this to be one or the other. People are expecting a massive crash or else a huge reversal. But if the fears of panic go away, you probably just see things go back to normal, where if there's no fear, if there's no panic, if there's no need to panic here, Bitcoin probably makes its way back up to where it was, but then it probably just continues to move around, right? A lack of collapse doesn't send Bitcoin to 85K. It probably sends it to the highs. You take out the lows in fear, it can probably take you all the way to the highs. It probably doesn't send it to 100K. 100K would be if the Fed actually had to come out, slash interest rates really fast, print loads of money, support the markets, like we saw in March. Because they came out here and said, we're going to print 2 trillion if needed, don't worry, the banking system won't collapse on our watch. What does Bitcoin do? It doesn't just go to the other side of the range, it goes all the way through, breaks out, and stays. So, I'm watching closely for what the Fed are going to do next. That's it. GM.